All right, good afternoon, everyone. Thank you for joining us today. This is Brian with TruckLogics, and we have a special guest, Jim O'Donnell, founder and CEO of TruckerTax Service, here to give us some advice come tax time every year. Jim has more than 10 years experience in the trucking industry, and he's helped thousands of drivers save money come tax time every year. So he's here just to share some of his insights and his expertise with you guys. So we appreciate you joining us today. We are going to have a Q&A session at the end of this. So if you have any questions for Jim, feel free to save those to the end. And I can either unmute you and let you ask the question over the air, or you can use the chat feature in the GoToMeeting panel to send your questions in. So without further ado, I'm going to go ahead and send it over to Jim and let him take it away.
Thank you very much. This is going to be probably pretty short. What we're going to do is just go over a few things of how you guys can save money on properly preparing for your taxes each year. The presentation itself, we're just going to go pretty quickly through it so we have plenty of time for any question and answer type period. So because that's typically the best place to get those questions answered that you have specifically. But we'll go ahead and get this started here. The first thing that we're going to do is talk about how we're going to manage your business. As an owner-operator or even as a company driver sometimes, but typically owner-operators or lease operators, the IRS considers you as an owner of a small business. When you are a 1099 recipient where you have no taxes removed, the IRS is going to look at you, and it doesn't matter. You can be a contractor, not even have any ownership of the truck or responsibilities for fuel, any of those type of expenses. The IRS is still going to look at you as owning your own business. And what you need to understand right away is that you must manage that business like any other business, you know, from a dry cleaner to a gas station to anything, any small business out there. It needs to be managed with monthly bookkeeping, and that's what we're going to talk about, touch on a little bit here. Now, what we're going to do is the biggest misnomer out there is that most drivers that I've spoken to over the years, unfortunately, when they call, what they are doing is they're scrambling because the IRS has contacted them because they haven't taken care of their taxes. So many drivers, big percentage out there, what they decide to do is they just kind of bury their head until, you know, maybe it'll just go away. Well, it doesn't go away. You know, as the old adage says, you know, two things in life that are for certain, and that's death and taxes. Ignorance is bliss until tax time is a very, very profound statement, because it's when you get that contact from the IRS is when things start to go spiral out of control. And what we want to do is make sure that you guys don't ever get to that point. The way you manage your taxes properly, I think, if this will move for me. Oh, there it goes. Okay. Now, what you want to do is, as I said, you want to keep on top of your business. As an owner-operator, what you're doing is your business is a successful business. The average owner-operator out there is going to earn anywhere from 125, and in some cases all the way up to 200, and quite a bit more than $200,000 per year. That's a successful small business. And owing taxes on that business is actually a good thing. It means that you are successful. Now all we have to do is make sure that we just manage those taxes for you properly. If the taxes are managed properly, all that worry, all that pressure falls off of you, and you get to enjoy the success of that business. And where you start is you start by tracking where all of that money has been spent and where you stay in each night. Two of the biggest missed expenses out there are per diem is one of the major expenses that is not managed properly. Per diem is, of course, the number of nights that you spend on the road. Every night, right now, currently, every night you're on the road, the IRS allows you $63 for each one of those nights. When you actually complete the tax return, it nets down to 80% of that number, or $50.40 per night. But that's $50 in your pocket every night in the form of expense coming off of your taxes. Most drivers don't manage that properly, and it's a very easily done tracking if you do it properly. The other thing is just the tiny little expenses that you don't track. Like you run into a truck stop, you're fueling up, you run in, you grab yourself a sandwich or a deli hot dog or something, and you're running back out, but you need a packet of batteries for your flashlight. Well, that $5 packet of batteries, that receipt doesn't seem to ever get into your expense count. Well, if you did that every day, just $5 a day, the average driver's on the road 300 nights a year, well, you've just thrown out $1,500 worth of expenses that could have easily offset an additional $300 in taxes that you've paid. So now what you want to do, the last line there is about investing in some technology. I know a lot of guys out there, a lot of drivers kind of resist the idea of having any type of technology because they're just not used to it. Technology this day is so easy, especially with what TruckLogics offers. If you get yourself disciplined and do it daily, you would only, literally, you'd only have to have that app opened for moments each day. You put in a couple of expenses, you close it, it's done. And then the rest of it is taken care of through the technology. And once again, it's not moving for me. Thank you. Okay. Technology is not necessarily my friend either. Okay. Now, some of the biggest pitfalls, as we say right here, is not understanding what is deductible. Well, we do. And the biggest thing that the advice I always give any drivers is, this is the general rule. If you purchased it while on the road, or if you purchased it to go on the road with you, most likely it's an expense that you're entitled to. I can't tell you how many drivers, percentage-wise, of drivers I've spoken with over the years that throw out receipts simply because they don't think it is a deduction. Keep every receipt. The only receipt you don't need to keep if it's 100% food. If it's 100% food, it's going to be calculated as part of your per diem, so you don't need that receipt. But everything else, I don't care if you purchased a $3 air freshener for the truck, hang on to it, because that $3 is going to become a deduction for you. Now, the other big pitfall here is so many drivers, just, I don't know what the percentage is, but my personal opinion would be that it's at least 80% or greater of drivers out there. What they do is they go to someone, either a local bookkeeper or worse yet, a local tax preparer, and some of these big box store tax preparers also. They don't understand your industry. And what they do is they put you into a category. They just kind of box you in along with every other taxpayer out there. Like myself, I could walk into one of these big box store tax preparation places. They'll do my taxes for me okay because I don't have the kind of expenses to deduct like you guys do. The problem is you get put into that category and you leave thousands and sometimes tens of thousands of dollars of additional deductions that you're entitled to simply because the individual that's representing you doesn't know what they're doing. If you don't use someone like us, or if you don't use someone like TruckLogics, find yourself somebody very, very well versed in the industry to help you with those situations. Now, the other big issue here is so many drivers, I can't, probably in the thousands and thousands of drivers that I've spoken to over the years, I could probably count on two hands how many drivers have actually made quarterly payments to the IRS. If you're successful with your business and you're earning some pretty good money where you're going to owe taxes, what you need to do is you need to make quarterly payments. It's a requirement by the IRS. If you don't do that, you're going to get fined at the end of the year. And it's not a horrible fine, but it's still a fine, and it puts, the worst part is it on the radar for the IRS. As long as you make those quarterly payments, and we would help you with that. What we do is when we complete monthly bookkeeping for you with the profit and loss statements and so forth, we would review those, and together we would decide how much money is to be sent in for this quarter. What we'll do is we ask the right questions, like, do you have an engine rebuild coming up? Do you have any new improvements? Are you purchasing maybe purchasing a new truck or trailer or APU, something along that line that's going to be a pretty big out-of-pocket expense? Well, we're going to hold back the amount of money that we send into the IRS, knowing that this upcoming expense is going to offset a lot of those taxes. That's what you need to do, is speak with someone that understands your industry well enough, so you're not sending in, as important as it is to send in a quarterly payment, we want to make sure you never send in too much, because you'll need some of that money to help finance your business as you move along. Now, another huge tip here, and this is what I've been telling drivers for 10 years, and I don't care if you're an owner-operator or a company driver, what you should do on everything you purchase is use a credit or a debit card. I don't care, like that $3 air freshener that I was talking about, pull out that debit card and use it. The reason I say that is because that way, if you lose the receipt, you still have a paper trail. You know where you can go and find that. All you have to do is pull monthly bank statements, and if you've been disciplined and you use that one card for everything for business. Now, and what I'm talking about here is a card that you don't mix up with personal. Get a corporate bank account or a separate bank account that you use strictly for business, and that way everything is in there. If you ever happen to be audited by the IRS, you don't have the receipt for it, but you have it in a bank statement, it's going to be very much acceptable by the IRS, and so it'll be your lifeline in some cases. And also the simple fact that now you won't lose out on any expense ever, and you can refer to that bank statement anytime that you're completing one of the options that you have to do the monthly bookkeeping. The big thing here, I was actually speaking to somebody earlier today, and that individual didn't have a smartphone. It actually almost fell out of my chair. I didn't know that it was even possible not to own a smartphone these days. Get yourself a smartphone. If you don't have one, get one, because there's so many good apps out there, such as TruckLogics, that you can track all of these expenses, and it's so user-friendly, and it's just easy to complete. And as I said earlier here, what you do is you literally just get yourself disciplined, like, you just get yourself parked, you're going to go in and have yourself some dinner. Well, just open it up, or perhaps the best thing is right after dinner, right when you come back to the truck, the first thing you do, you just open up that app, put in the few expenses that you had that day, close the app, and you're done. It took you 2 minutes to complete it, and now you have everything being tracked properly. When you track your business, as we say, early and often, everything falls into place. Everything becomes so much easier. Most drivers, and I'm not talking just drivers here, most Americans, with small businesses and so forth, what they do is they get themselves into trouble because they don't manage their business properly. And with the tools that you guys have at your fingertips, it's very easy to do it even when you're on the road. So now, that's really all we really had to talk about today, is just to be smart about how you're managing your expenses and so forth. All of those expenses, by the way, what we will do with that is we take that, and of course we'll talk to you about the expenses and so forth, and we'll put that into a completed tax return for you. The results you'll see, we typically call it the wow factor, where a driver that we complete taxes for the first time, they're going to have a reaction of, whoa, how did you get me these results? Well, it's because what we've done is we've assisted that driver in getting all of those deductions that he's entitled to. It's a very easy process if you do, in fact, just stay on top of it. Now, anybody with any questions, I'm going to turn this back over to Brian. As I said, this is going to be very short, so we could get to the question and answer period. And I want to turn that back over to Brian, and then I'll be happy to address any questions that anybody has out there.
Yeah, absolutely. So you guys, if you have a question, you want to take full advantage of Jim's expertise here, you can use the little raise your hand feature on your GoToMeeting panel, or you can also use the question feature. So if you either want to raise your hand, I can unmute you and let you ask a question over the air, or you can use the little question panel there to type in your question, and I'll read it out for you, and Jim can answer it for everybody. So feel free to go ahead if you guys do have questions. I know Jim's more than happy to answer them for you.
The other thing, as we're waiting, and Brian, just let me know if you see somebody come in. As we're waiting, the biggest thing also that you want to do is you got to understand the IRS is not the enemy. As much as we all don't like the IRS because they do suck so much taxes out of us, they're really not the enemy. All they want to do is make sure that you're filing proper tax returns each year. Basically what you need to do is just make sure that you always communicate with them. If they send you a letter saying, hey, we haven't heard from you, we haven't seen a filed tax return in, the last couple of years, well, don't panic. What you need to do is simply pick up the phone and talk to them. Or better yet, pick up the phone and call somebody like us, because then we can help you with the situation. And there's so many different ways that you can manage a situation. I mean, we've had drivers that have had hundreds of thousands of dollars of taxes due, and we've gotten them out of trouble. Where now they're just driving, they get to put themselves on a monthly payment plan, and actually honestly the hundreds of thousands of dollars disappears. It becomes tens of thousands at the most, and it's just because we know what we're doing, and we'll get them filed properly. But don't avoid addressing the situation is the biggest issue that most drivers have, because they just decide to just drive on down the road and forget about it. It doesn't go away. In fact, all it does is get worse. So make sure that you always attend to it properly.
Very good. Let's see here. We have Sherry. She's just stating that she does need some help with her taxes. So absolutely, Sherry, I think Jim will be more than happy to help you out with that. His contact information is actually here on the next slide. So after we get through this this little Q&A session, make sure to jot down his phone number, email address if you need it, and I'm positive that he'd be more than happy to help you with that. Looks like we do have. Go ahead. Looks like we do have a question here from Gina. Gina says, how should a married couple file when paying for a spouse's salary, I'm assuming? We're an LLC and have filed a Schedule C with our personal. Wife does books and needs a salary. How is the best way to handle that, Jim?
Okay, if I understood you properly, so this is that you have an LLC. You guys, you file a Schedule C, which is, within your personal tax return, and you're wanting to know how they pay themselves as salary. Is that what I'm understanding?
I believe so. I think the question's, she said yes.
Okay. What you want to do, if it depends on how the LLC is set up, first of all. If the LLC is just a single member LLC, or even if it is a partnership LLC like you and your husband, if it's not incorporated, what's going to happen is all that money is going to flow into your personal, that's Schedule C, where it gets completed. Actually, that's incorrect. A partnership LLC will be, a corporate return will be done, and the profit from that will still flow into your personal tax return. If it's an individual LLC, single member LLC, then it's done within a Schedule C. But either way, it flows into your personal 1040, and that's where you pay taxes. You don't really necessarily need to pay yourself a salary. You can. If you do, this is what the IRS requires. Now, here, let me back up here a second. If you pay yourself a salary, what you do, that money that you pay yourself, you don't have to have taxes as you pay yourself. It'll automatically get calculated when you file your taxes at the end of the year. The problem there is now what you're doing is, say you paid yourself, I'm just going to use real low generic numbers here, round numbers. Say you paid yourself, $20,000 for the full year. Well, that $20,000, what it does is it shows as part of your profit of the business. That $20,000 is going to come over and show as additional, that'll be your profit, and they're on your personal tax return, and you pay taxes on that. You pay taxes, both federal taxes as well as self-employment taxes. Self-employment taxes is basically Social Security, and you're going to pay it on the full $20,000. And the thing is when you're an independent owner like that, as a 1099 person, what happens is you're both the owner and the employee, or I should say the employer and the employee. And so instead of paying just 7.5% Social Security, you're going to pay a full 15%. So it gets pretty painful, the amount of tax that you pay. So the fact that you want to pay yourself a salary, what you can do is you can hire a payroll service out there. What you do is you find a payroll service, and we could recommend, you could give me a call later or whatever, we could recommend a couple of different payroll services. What you do is get yourself signed up. The IRS requires that you pay yourself a reasonable salary. So if you were going to, take $20,000, or let's just round that number up a little bit and say $2,000 a month or $24,000 per year, well, you could pay yourself a reasonable salary of, say, $1,500 a month. The payroll service would take care of all of the, Social Security, federal taxes, Medicare, all of that, and say that $1,500 a month, now you've paid in, using round numbers again, $500 in taxes, and so you're putting in $1,000 in your pocket. Well, the additional $500 that you earned, it's still sitting there in your account, and you have full access to that money. The difference is that $500 avoids self-employment tax now. And so now you just avoided paying 15% on that $500. So in this scenario, you would save yourselves $75 per month, or in this case, $900 a year in taxes. Now, I don't know if that answers your question on payroll, but I mean, we used to offer payroll, and we're really not doing it now because it's just not a mainstream for us. But there's lots of opportunities out there. In fact, we could talk. So just give me a call, and I could walk you through the best way to do payroll. But as I started at the very start of this answer, is you don't really need to pay yourself payroll as an LLC. When it's a requirement is when you've become an S Corp. Now you're taxed as a company, and you need to abide to different rules. But if you're strictly an LLC, you're not required to do that. You're just going to get burned or bit by some taxes at the end of the year.
Okay, great question, Gina. It looks like Gina has a follow-up question. So she's saying that won't cut the self-employment taxes paid. It actually increases the tax. And then she said, okay, thanks. So maybe you did answer it for her.
Yeah, it doesn't. You're not going to cut your taxes by paying yourself payroll. The only thing you're going to do is you're going to reduce your self-employment tax. But in order to reduce the self-employment tax, what you must be incorporated. You can't just do it via an LLC. If you pay yourself a payroll on the LLC, you're not going to reduce any of your taxes, is the bottom line.
Okay, very good. Okay, anybody else, feel free to ask your questions now. Don't be shy. We are going to give you Jim's contact information, so if you want to ask a question off the air, you can certainly do that. Sherry has a question here. What about an LLC that files as an S Corp on federal?
If you're filing as an S Corp, then it's a different, I mean, what you do is, see, an LLC, when you register yourself as an LLC, you get yourself registered with the state or federal, you become a limited liability company. Well, you have an option to be taxed as an S Corp. And when you exercise that option to be taxed as an S Corp, now that's where the taxes, you're taxed as a company instead of as an individual. That's where the benefits will kick in. It's a little confusing, but what we typically do is we don't do that ourselves either. I mean, we'll handle the tax side of it when you bring the paperwork to us afterwards. But to get yourself set up as an S-Corp, typically a LegalZoom.com or a local lawyer or somebody like that could probably help you. We do have somebody that we can hand you off to. It's a little pricey, but it depends on the success of your business and so forth. In most cases, it's well worth the investment to get yourself set up as an S-Corp. So then you do pay yourself a reasonable salary, and you can significantly reduce the amount of self-employment tax that you pay. On a driver that averages about $50,000 profit per year, now that's including what his salary is based within that 50,000. I mean, you're looking at what you could save yourself is easily $5,000 to $7,000 in taxes by just getting yourself structured properly. And I can go into more detail if any of you would want to give me a call. I'd be happy to explain that in a little bit better detail.
Okay, and Gina has another follow-up question for you, Jim. She wants to know if there's an income point where it becomes beneficial to move from an LLC to an S-Corp.
Wow, very good question. Typically, what we're looking at is that number I just threw out there, about $50,000 net. When your business is producing about $50,000 cash flow, meaning that's after all of expenses have been accounted for, all of your per diem, the truck depreciation, everything else has been accounted for. That's your taxable profit. That $50,000 is normally about the threshold when you really want to be considering becoming an S-Corp.
Let's see, we got another question here. It's like from David. Can past tax filings be reviewed? And if so, what is your experience with that?
Absolutely. In fact, very good question. What we do is typically, all of our new clients that come to us for the first time, all of our new drivers come to us, and I talked about or touched on it a while back there about the wow factor. When they see the results, they're like, whoa, how did you do this? Well, it's because we know what we're doing. And what we'll do is we review a bunch of, in fact, this time of year from pretty much, end of April on, we spend more time, I think, reviewing and completing what's called amendments of tax returns that have been filed improperly before. So if you filed a tax return with one of the big box stores or some local tax preparer or your Aunt Edith did them for you, but they didn't know anything about the trucking industry, most likely they didn't account for all of the expenses that you're entitled to. We'll take a look at something like that. We'll review it and let you know if there's an opportunity. About 90% of the time, what we'll end up doing is we end up filing amendments for these drivers. And if, as an owner-operator, reduce what they've paid in significantly, in most cases by thousands of dollars. And as a company driver, what we'll do is we'll increase the size of the refund. And typically, that's in the neighborhood of $1,000 or more per year that we get back to them in the form of additional refund money. So reviewing old tax returns is incredibly critical because most likely you've been misrepresented.
Very good. And I think Lindsay has a follow-up question to that. She raised her hand, so I'm going to try to unmute her and see if she can ask her question over the air.
Okay.
Lindsay, are you there? Okay. Her speaker may not be working, but I think she did type it in here. I think she's just asking how far back can you guys go with that on return, on refunds?
Well, okay, on refunds, the IRS only allows you to go back 3 years. So that means right now what you're looking at would be 16, 15, and 14 would be the 3 years that you could redo or file an amendment on and still get money back. We did a driver here a while back that, once again, that wow factor now, he did it before April 15th, and so he was able to go back 3 full years, meaning the cutoff is April 15th for next, like you can go and redo your 2014 and up until April 15 of 2017. So what we did is we did 3 years for him, and he ended up receiving $1,500 back each year. So it was he was a pretty happy camper to do that. But the short answer is 3 years back to get any additional refund money.
All right, very good, guys. We'll give a couple more minutes here to see if we have any more questions come through. While we wait, I do want to just quickly show you guys. I know most of you guys are TruckLogics clients or have had a TruckLogics trial at some point. So if you haven't been in there a while, it is coming up on that time of year here at the end of the tax period. And one thing you definitely want to know where it is in your account is your year-end tax report. So it's found here in your report section, and you know, this is going to lay everything out for you for the year. So you definitely want to start reviewing this, making sure this lines up with what you were thinking. And this is perfect for someone like Jim. If you need someone to file your taxes for you, this is what they're looking for. Very nice and laid out, organized report that kind of goes over everything. So just to throw that out there so you guys know where that's at if you haven't started to look at that yet in your account. All right, guys. Well, if there aren't any more questions, here is our contact information here. You got Jim's phone number there, so definitely feel free to give him a call. You also have our contact information if you want to reach out to us. Any questions you have at all, support@trucklogics.com. There's our phone number, and we can always get you in touch with Jim too if you had some additional questions for him or you just wanted to talk to him. Like he said, he'd be happy to talk to you guys and get you rolling. So that is all we have today. Jim, do you have anything else? All right, very good. Well, we appreciate you guys coming out today. Like I said, reach out to us again if you need us, and I hope you guys enjoy the rest of your afternoon. Thanks.